Hi, welcome to Tiffany Teach Tuesday. Today I'm going to speak about 203K lending. 203K lending can be very beneficial for individuals who has a dream home that they want to purchase but won't qualify for a traditional loan. So there's three types of lending: FHA, conventional, and 203K. Then you have other types of lending outside of that, but those are the main three type of lendings. Most people get FHA loans. And to get an FHA loan, there are a lot of requirements that need to be met for you to occupy and the loan to be processed. So, if the house has chipped paint, it doesn't have any running water, and it's like a distressed home, you won't qualify for a FHA loan. Now, you can get some conventional loans will allow you to purchase the property if it's not FHA, meet all the FHA requirements. However, you still can get that property with the 203K loan. That loan helps you to buy distressed property and rehab it and not use your own funding. Now, let's start here. 203K loans goes through a different process to get to the closing. They take longer to close. They take 45 days. A typical trip at the minimum 45 days. A typical FHA or conventional loan takes only up to 30 days. It typically only takes 30 days. So that in saying, some sellers are reluctant to accept a 203K loan because it takes a little longer to close. But a 203K loan, also going through the process, you may not be able to buy the property because it may exceed the value of the 203K loan value that they're giving you. So let me give you some of the criteria of how they come about getting you approved for a 203K loan. So when you go to a lender and you submit all your documentation, most lenders do 203K loans. Now, your lender may not be savvy in how to do a 203K loan, but most lenders offer 203K loans. So remember that. And when you're looking for a lender, you should ask your lender, do they do 203K loans? Because you might find your dream home that is a distressed property that will not qualify for an FHA loan, but you can use a 203K loan to purchase it. So when I get clients that are buyers, I'll contact their lender and say, hey, can you do a 203K loan? And they say, yes, I can, which helps me to expand their search. Because you can use a 203K loan for minor property repairs that would not typically pass an FHA loan, but you don't qualify for a conventional loan. So I'm going to give you an example. I have a client now that I'm working with. She has a budget. Her budget, when we were out, we were putting multiple contracts on things, and she was getting denied for traditional lending. We come across the come across a HUD property. The HUD property is in immaculate condition because it was just rehabbed in 2016. But it won't pass the FHA lending because someone went in and cut the copper piping from the water line to the main water source. So you have to, for FHA loan, it has to be occupiable. So that you cannot occupy the property with no running water. It had chipped paint. She couldn't get that. But my client didn't qualify for for conventional loan or FHA. It wouldn't pass FHA. But my client already had a pre-approval for her for a 203K loan. So we were able to put a contract on this property that was in immaculate condition, but it had some minor repairs that needed to be done that would not have passed an FHA lending. So when we put in the loan for it, they accepted her bid for the offer. They accepted her bid. My client wanted to do a home inspection. Now, I tell my client, that's a waste of money. So then this is understanding the 203K process. A home inspection for a property that has no running water is a waste of money because you cannot turn on the waters to see if there are any leaks because there's no main water line. And with HUD, the lights were off. They turned off the power. So that means you will have to pay for the power to be turned back on and get it cut back off and winterized. But for what? You have a 203K loan. You need to get it'll be beneficial for you to get a HUD consultant. Now understand this. A HUD consultant is an inspector. They're FHA inspector. They're the people that come in and say, hey, if you want to buy this property, you have to make all of these required repairs via FHA. Because a 203K loan is an FHA loan, but it's a rehab loan. So they're going to tell you the mandatory repairs you have to make. They're going to give you the cost of the market rate of labor and material for these repairs. Then they're going to say, we recommend these additional repairs. Even though FHA is not requiring them, they're not mandatory, but we recommend them. Then they're going to take into consideration your desired repairs. And on all of these repairs, they're going to give you the cost and the labor cost. And they're going to give you what they call a BOR. With all of these, detailing these expenses for this. Now, a HUD consultant averages about $500 to $600. The same $500 to $600 you were going to spend for an inspection, you spend on a HUD consultant. Because the HUD consultant has now done what needs to be done, giving you a price point that you're working at to determine if you can financially afford to purchase this home. A traditional home inspector cannot do that because a traditional home inspector cannot give you pricing, but a HUD consultant can. So that is the plus side of using a HUD consultant versus a traditional home inspector, which will be for someone who's on a tight budget. That's $600 that was not useful because they can't tell you the things that a FHA HUD consultant can tell you in a home inspection. So once you've gotten this BOR, he's going to give you two of them. One that's blank and one with all the numbers. You send the blank BOR to your preferred contractors who are going to do the work for you. And they're going to give you bids off of that blank BOR, which says these are the recommended repairs I have to have made, and these are the mandatory repairs and the desired repairs. So you have to use this form and complete what they said I have to have done and give me a price. You preferably two, you have to at least get two. Preferably three would be great, just in case somebody reneged, don't come through. You have two, but you have to give the bank which one you're going to select. But you want to know if your person that you're selecting isn't going to give you a good price. They may not do service, but always have a backup because they may become busy, can't do it. Anything can happen, so get you two for definitely to be sure. Now, you have these HUD consultants. You have the BOR from the HUD consultant plus the estimates from your contractor. Now, here comes the tricky part. If the HUD consultant estimates that the amount of work that needs to be done is, let's say, $50,000, your purchase price is $100,000. Your pre-approval is $140,000. The house is not affordable unless you can get a contractor that could come within that $10,000 difference. So you may have to remove some of your desired things to meet that budget of what you pre-approved, because the bank is not going to give you more money to make repairs that you do not qualify for. So whatever your pre-approval is, you have to be able to qualify for that amount to make, in addition, including the making the repairs. So if your pre-approval is for $160,000, the repairs cannot exceed, and the purchase and the repair of the property cannot exceed that $160,000 pre-approval. So keep that in mind. Now, this is the second caveat to this 203K. Now you found these properties, we did the repairs, and when the appraisal time comes, the repairs that you're doing has to increase the value of the property for it to appraise. After you have done the repairs, it will appraise to the amount that you owe on the property. So after all the repairs are done and you get appraisal done, and the appraisal says when he looks at it, he says, hey, once they do all these upgrades, fix all of these things, the property will be worth $140,000. Then the bank will lend you the $140 you qualify for. If the appraisal comes back and say, hey, even if you do all of these repairs, this house will not be worth more than $100,000, the bank is not going to give you the extra $50,000 you need to make the repairs. So be mindful of that. And so those are the things that sellers kind of shy away from conventionals, because the value of the repairs may exceed what your loan value is, and you get the loan declined and they have to cancel the contract. In addition to that, if it exceeds the appraisal value, the deal falls apart. So those are things that make some buyers reluctant to sell to people with 203K loans. However, and it takes a longer process. However, if you have a savvy broker who's working with you, they can kind of gauge what the homes in the areas. They also have to gauge what the homes in the area are selling for, to ensure that they can get the appraisal done for the value of the home. Now, somebody just put in, the contractor also has to have their own money to start the job. Part of that is true, just depending on the banks. Some banks will give you half the draw up front to them to start working. Some will make the contractor put their own money up, but they all have to be vetted by the bank to ensure that you even meet the guidelines that they set to give you a HUB rehab loan, because you have to have a certain license and insurance and things in place for the bank to approve them as your contractor to do the work. And they require sometimes you putting up some of your upfront money to do the work. So that's for those contractors who are thinking about getting to 203K loans. You have to have some cushion money to get the job started. It's not like when you hire somebody else, like, hey, I need 1/3 now, 1/3. No, you have to do draws, and I'm going to get into that too. So now you have met all the requirements to purchase the property. You close on it. Now, some lenders, depending on how long the timeline is to purchase, to get the repairs done, will give you put into your mortgage payments enough months to cover the work. So they say, hey, it's going to take 3 months for us to get this done. They're going to put into the mortgage payment 3 months of mortgage payments, and so you don't have to pay mortgage for a property that you can't currently live in, and you can still pay where you're staying at. Now, if the budget is over a certain amount, some banks is $30,000, some banks is $50,000, some is $20,000. It just depends on the lending institution. You have to have a HUD consultant regardless. You have no choice or option in this process. And you have to pay the HUD consultant to come out and assess the amount of work that's being done and pay out draws on those jobs. So that means if they came in and they said they had to paint the whole house, put new flooring down to get their first payment, they're going to come in, paint, put the floors down, and get their first payment. Now, you have to watch your contractors in these 203K processes too, because why are you putting down painting the walls, and you still got to upgrade electrical? So they'll do that because sometimes painting of a home is like a big expense. People think painting is inexpensive. To paint a, say, 1,800 square foot home from top to bottom, even as one level, it's going to cost you about $4,500 to $5,600. That's including paint and labor time. That's a big chunk of the budget. So some of them will come in and paint first, which now they got to come back and touch up paint because the electrician cut a hole in the wall trying to fix the electrical outlet that wasn't working. So you also have to be mindful of your contractors uh, doing the job backwards, as I would say, to get payout sooner. There are certain steps and process. The plumber should come before the electrician. The electrician comes next. The HVAC. Well, HVAC actually should come first because you need heat, and they have bigger spaces that they have to fill. Then the plumber, then the electrician, because the electrician can pull wires and piping through. So it just depends on it. But the main mechanics need to be done first. Let's get that clear before you start painting and putting floors down. Some people, but those are very expensive trades. So some people do work first to get a payout so they can pay those trades versus having the capital to do it themselves. So once you go through the process, then your HUD consultant will give you the draws to the payout. You have to agree to the payout, and you both sign off on the contracting you for the payout. That's for anything over either $30,000 to $50,000. If it's below that, you'll work with the with the contractors and the bank, and you'll do the draws on your own, and that'll save you some money if it's a smaller job and project. So don't be fearful of a 203k loan because they are very, very beneficial and you getting a property, maybe your dream property. Then another thing I need you all to know is if you cannot turn on the water, and especially in Illinois in the northern parts, we have a lot of trees. I don't know why they like planting trees in the front yard where the water line runs, but those tree roots are nightmares for sewer lines. And in the city of Chicago, if the sewer line is broke on the homeowner side, they have to pay for it. If it's on the city side, then the city will pay for it. So you don't want to buy a home that has tree roots in the line and you're paying $10,000 or $15,000 of your budget just trying to get the sewer line fixed. So my recommendation to you is instead of getting for a distressed property, instead of getting a home inspection, to get a sewer view. That means get someone to run a camera down the drain line and see if they see any roots or branches or broken drain lines for getting rid of the waste. That costs about $350 to $400, which is a good price to pay instead of paying for a home inspection for a property that does not have running water or lights. The sewer viewer is very, very important in single family homes to save you thousands of dollars to know what your sewer line looks like if you're buying a distressed property. So I hope this has helped some brokers who have been reluctant to work with people with 203k loans, for investors who are reluctant to try to get one to help them get into the game, and for homeowners who want to buy but can't keep getting outbidded or can't afford their dream property in the neighborhood they want because they're priced high, but they can get a distressed property that's below market price to move into that dream neighborhood. So I thank you for tuning in. If you have any questions, feel free to send me a message and I'll be glad to answer them. Thank you.